Nvidia and this broader OpenAI story. So many of these tech names to break down, but I want to focus on Nvidia here. We've had a lot of commentary on this deal between Nvidia and OpenAI, and I want to know your thoughts on who's the biggest benefactor to this deal, and is it a good deal for Nvidia? Because I think there's no argument it's a good deal for OpenAI.
Yeah. Some criticism over the circular aspects of this acquisition, or of this deal, excuse me. OpenAI is signing up to buy a lot of chips from Nvidia at the same time as Nvidia is making a large investment in OpenAI. So the natural question is, well, geez, is Nvidia just financing purchases of its own goods to benefit its income statement short term, and then leaving a potentially huge, long-term risk? I think of it a little bit differently. I think that NVIDIA's making dozens and dozens of investments in AI native companies. They've been doing that for years. They're going to keep doing that. I think the company made over 50 individual investments in VC-backed AI companies in 2024, and they'll probably doing more this year. Obviously, the OpenAI one is the largest in terms of dollar amount, at 100 billion. But I think it just continues the pattern that NVIDIA's, been after for a long time. AI is new. They have a front row seat to a lot of the innovation and wonderful tools that are being built and software products that are arriving on the market. And they're not just standing by and watching it. They're actively investing in those companies. I think they've made some wonderful investments. CoreWeave is one. There's so many others. And then, of course, OpenAI is shifting from relying on partners to build and operate data centers in which they train their newest models. They started with Microsoft, of course, and are now transitioning to Oracle for upcoming generations of their models. And then the third phase will be them owning and operating their own data centers. And that's what this order from NVIDIA relates to, starting in late 2026. So I think it's a natural evolution. I think this deal is a rational, smart move from both companies' perspectives, and I think it's mutually beneficial.
NVIDIA's long-term investment thesis is strengthened by its historic agreement with OpenAI. Despite Broadcom's competitors, the chip titan is well-positioned to prosper. NVIDIA's value makes sense considering its rapid rate of growth. In reaction to a $100 billion strategic alliance with OpenAI, NVIDIA's stock reached an all-time high on September 22nd. By making incremental investments in data centers as each gigawatt, GW, is deployed, NVIDIA is assisting OpenAI in reaching its objective of constructing at least 10 GWs of data centers specifically designed for artificial intelligence, AI. Given that OpenAI requires funds to realize its potential and that it is presently organized as a charity with intentions to become a public benefit corporation, the news is noteworthy. The largest of the 10 titans, the Magnificent Seven plus Broadcom, Nasdaq, AVGO, Oracle, and Netflix, and the most valuable corporation in the world is NVIDIA. The 10 titans, which account for almost 40% of the S&P 500, are very powerful. Here are several reasons why NVIDIA is still a dominant force in the AI era, where it sits in relation to Broadcom's competitors, and if it's worth purchasing now. As previously said, NVIDIA was a steel manufacturer during the onset of the skyscraper era. The most cutting-edge graphics processing units, GPUs, together with related networking hardware and software, are produced by NVIDIA. These systems are essential for processing AI workloads in parallel, which demand enormous amounts of processing power. Everything begins with compute, according to OpenAI CEO and co-founder Sam Altman's news release from September 22nd. The economy of the future will be built on compute infrastructure, and we will use what we're developing with NVIDIA to both develop new AI innovations and provide them to individuals and companies on a large scale. NVIDIA's investment in OpenAI follows its announcement on September 18th that it will buy $5 billion worth of Intel stock. NVIDIA's NVLink technology, which speeds up communication between GPUs and CPUs, will be used by Intel in the design and production of customer data centers and CPUs. NVIDIA's data center business now accounts for 88% of overall revenue, demonstrating the company's remarkable success as it continues to push the limits of AI computing power. NVIDIA's earnings are increasing quickly and show no signs of slowing down. However, it is not the only business spearheading data center computing's future. The application-specific integrated circuits, ASICs, that make up Broadcom's bespoke AI chips, XPUs, Broadcom collaborates with hyperscalers to provide customized AI chips that fit their AI operations, in contrast to GPUs, which are all-purpose workhorses in the data center. The approach is working, as Broadcom's stock has surpassed Nvidia's so far this year, reaching a record high and approaching a $2 trillion market valuation. Broadcom's AI income is heavily linked to the increase in hyperscaler capital expenditures, much like Nvidia, which is dependent on a small number of clients. By the conclusion of this fiscal year, Broadcom's AI revenue is predicted to have increased to around $20 billion from $3.8 billion 2 years prior. Therefore, Broadcom is challenging Nvidia's dominance in AI revenue, even though it is still magnitudes smaller than Nvidia. More than 1 million XPU clusters can be connected across several data centers thanks to Broadcom's AI processors, Jericho routers, Tomahawk switches, and other related hardware. Because Broadcom's bespoke chips are more energy efficient than general-purpose GPUs, their economics significantly improve at scale. Nvidia won't be replaced by Broadcom, but it will probably play a bigger part in the data center. Instead, both businesses will probably collaborate, with Nvidia leading in adaptable compute for AI training, inference, and high-performance computing, and Broadcom concentrating in task-specific functionalities. The recent rush of announcements demonstrates how both businesses are well-positioned for success. A $10 billion custom AI processor customer, most likely OpenAI, was reported by Broadcom in its most recent financial report, which was released in early September. However, Nvidia and OpenAI are working closely together, and OpenAI is the main force behind Nvidia's move to 10 GW of data center capacity. For certain jobs, a hyperscaler like as OpenAI might collaborate with Broadcom to create specialized AI chips. However, these chips are slow to develop and are best suited for inference, meeting the requirements of pre-existing AI models with set patterns. On the other hand, Nvidia's GPUs, when combined with its CUDA software system, offer a solution that is now effective and more adaptable for complicated and changing situations, such as training models with new parameters. Similar to how it extended its cloud collaboration beyond Microsoft to include Oracle in a historic $300 billion contract, OpenAI is probably lessening its reliance on a single chip supplier. OpenAI's supply chain risk is decreased by distributing business among several vendors. In the data center, Nvidia is still the industry standard. Investors should see the two businesses as instances of the changing structure of the contemporary AI data center rather than as rivals because they may coexist well. Nvidia is not cheap at 39.7 times forecast profits, but it is also less costly than it was previously, especially considering that its earnings are still increasing quickly. In actuality, Nvidia is less expensive than other 10 Titans stocks like Tesla, Broadcom, Netflix, and Oracle when looking at forward earnings. For growth investors, it's also a far superior investment than a stock like Apple, which is expanding earnings considerably more slowly than Nvidia despite trading at 34.5 times forward earnings. Overall, Nvidia is still a solid investment in AI growth stocks. However, investors would want to think about adding both Broadcom and Nvidia to their long-term AI portfolios. In its most recent wager on the UK, the artificial intelligence behemoth Nvidia is getting ready to invest in Oxa, a British autonomous vehicle business. Oxa says it is in the advanced stages of gathering more money and plans to offer autonomous devices to warehouses and airports. Due to significant losses and the sluggish advancement of driverless technology, the company is trying to avoid going bankrupt before the end of the year. Earlier this month, while accompanying Donald Trump on his state visit to the UK, Nvidia CEO Jensen Huang hinted that he would invest in Oxa. The most valuable business in the world, the titan of microchips, announced plans to invest $2 billion in British startups over the next several years. One of Britain's most promising autonomous vehicle firms, Oxa, previously Oxbotica, launched the country's first autonomous vehicle in 2016. However, in the face of slower than anticipated technological advancements, it has focused on creating autonomous cars for off-road settings such as power plants, airports, and mining complexes. Despite raising $177 million in capital, Oxa lost $68.9 million last year and had just under $30 million in cash at the end of the year. During his recent trip to the UK, Mr. Huang met Oxa's CEO, Gavin Jackson. The CEO of Oxa, an amazing autonomous robotics and autonomous driving startup, stated at an Nvidia event, I'll put money into your upcoming round. According to him, Britain is on the cusp of an AI Big Bang moment. According to the corporation, more substantial financing will be needed in 2025 to support the group's activities and enable it to pay its debts when they become due. Because according to the report, fundraising is at a very advanced stage. Oxa's driverless systems already make use of Nvidia software. Last week, Nvidia participated in a $1.1 billion investment in the data center business Nscale and announced intentions to invest $500 million, $373 million in Wave, the autonomous vehicle startup. Oxa's revenue increased from $794,147 in 2023 to $3.1 million in the previous year, but significant costs much surpassed this. BP, Google, and Ocado support the business. Ocado made an investment in 2021 with the goal of creating delivery robots, and BP's refineries have tested its self-driving technology. In the U.S., it also provides services in retirement communities. In the face of fierce competition from companies like Wave, Tesla, and Google's spin-off Waymo, the company has concentrated on providing potentially less expensive technologies in simpler industrial sites rather than a completely road-capable system. The massive Chinese tech company Tencent is also an investor. In anticipation of a broader rollout in 2027, the government is getting ready for limited testing of driverless taxi services in the UK next year. These days, the infrastructural build-out is the main priority. Companies and nations are racing to establish their AI footprint by building and growing data centers. In fact, according to Jensen Huang, CEO of the massive AI chip company Nvidia, investment on AI infrastructure might reach $4 trillion by the end of the decade. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
At this point, we've heard from so many billionaire critics saying that the artificial intelligence data center build-out is an outrageous bubble that it really has become terrifying, hasn't it? This promotional pessimism, as I'm calling it, is the kind of thing that scares people away from owning stocks, scares you away. And now I think it has become a beastly overhang on the entire market, although that bearish AI shroud was not enough to frighten us today as the Dow gained 300 points, S&P climbed 0.59%, and the Nasdaq advanced 0.44%. Now, I've heard this gloomy chorus in the background during some of the most dazzling stock performances I've ever seen in my life. I've never advocated the negative position, the bubble, recklessness, so the so-called foolish spending, partially out of respect to the leaders of the so-called hyperscalers. The trillion-dollar companies that are spending fortunes building out their AI data center networks because they think that that's where the opportunity is. I will not call it a bubble because I trust the judgment of Jensen Huang. He's the CEO of Nvidia, who's arguably the father of both accelerated computing, which does matter tremendously, it's not talked about, and generative AI. Jensen's been met with skepticism every step of the way, and the skeptics never seem to learn, even as he constantly proves them wrong. And I think he's doing so again. Even though the data center spend is admittedly humongous, you got to keep in mind that it's coming, for the most part, from the vast cash flow of the richest companies on Earth. They're not borrowing money. Lately, though, some build-out plans announced by Sam Altman's OpenAI and Oracle, founded by Larry Ellison, now with two CEOs, have caused some trepidation because they're spending well in excess of what they can afford. Now, I've got to tell you, I actually am uncomfortable with that. But again, when I hear Sam Altman talk on our network in a great interview with John Ford about the demand that he has, when I know NVIDIA's roadmap for a reasoning semiconductor platform, one that can comprehend and actually help your advanced thinking, okay, and maybe be ahead of you with complex problems, I have to suspend a guilty verdict, or at least I intend for Mad Money to stay open-minded. So don't call me a cheerleader. But I believe that AI is getting better and better and better and will be worth every penny when things shake out because Jensen Huang has assured me and I have no reason not to trust him. Plus, unlike the dot-com era internet build-out, which was often financed by vendors, it's called vendor financing, or likely financed by shaky institutions, the data center build-out is largely funded by the smartest people on Earth who are running the richest companies on Earth. The CEOs of these companies believe AI will be the next industrial revolution, and they know. I, for one, am not smart enough to doubt them. I own that. I don't have that. They've made us too much money, though, to think that they've all lost their mind.
Yeah, I feel like we continue to see lots of new data center commitment and building announcements. OpenAI is agreeing to fund a lot of these. We've seen a lot of news related to Oracle and some of the other neo clouds. And just generally speaking, AI infrastructure investment remains feverish and growing rapidly year over year.
And Jed, as far as AI and the AI trade, what role is that playing in sort of this ongoing rally that we've seen?
Yeah, it's playing a dramatic role, a leading role in markets. Over the last 3 years, AI exposed companies account for the majority of the increase in the stock market. It accounts for nearly all of the incremental CapEx growth in the S&P 500. And so it has been driving markets for a long time. That goes for the current day as well. And I think it's going to be a huge factor in this earnings season coming up here in the next few weeks.